Hey, this is June from Turning Point Life Investment, and this is your market analysis for February 13th, 2010. Okay, so looking at the SPY 6-month daily view, you can see not a whole lot has happened this week. We pretty much went sideways for the majority of the part. Last week I mentioned to watch out for this hammer. We might get some bullish follow through, and I expected some bullish follow through, and we got that this week. We got some decent rallies. Most likely the market may want to tag this 20-day moving average. So if there's any more upside potential, I would expect some kind of tag around this 20-day moving average, similar to what happened here a couple of weeks ago. Overall, if you look at the indicators, it looks like it wants to the market looks like it wants to work out some of the divergence that's been showing with the MACD, as well as work out some of the oversold conditions. So overall, by going sideways or at least pulling back a bit, it's allowing the market to come out of these extreme either divergence or oversold conditions. Now, going into an hourly view, I did mention that the market has pretty much been sideways, and you can see that the price action has been very choppy. Okay, so that's a very good indication of consolidation or correction. Usually, when the market is impulsing, it should be rather smooth, or at least it should be pretty easy to spot where the current trend is going. For example, here, right, pretty easy to spot. But when the prices are pretty choppy like this, you can pretty much guess that it's in the consolidation mode. So all we can really do is just wait for some kind of breakout either above the previous high, or I should say at least the current highs. You can see how prices are fitting pretty well within this triangle looking pattern. Somewhere above the 108, I'll say like around 108.50. If it can get above or break out of this triangle and be able to close above this triangle, then the market has more upside, probably around 109, maybe even 110 to retest this gap area. Now on the flip side, if we get a breakdown underneath this triangle, then that tells me that the market wants to or is ready to move lower once again. So either way, I would be mindful of either up or a downside break and just let the market tell you where it wants to go. And as far as downside target, I keep expecting the market to shoot for this area around the 102.5, 103 area if and only if we get that break outside of this consolidation triangle right there.